All right, Kate here. I want to take a look at another company that has some great fundamentals, particularly earnings estimates looking ahead, that make it worth a look right now. We're going to look at both the fundamentals and the charts. This is Lattice Semiconductor. And of course, the semiconductor stocks have been doing really well due to the shortages. Just a typical supply and demand question. Anytime there's a shortage of supply, demand goes up for the suppliers. Okay, so this is a mid cap, got a market cap here of a little over 10 billion. So not one of the bigger semiconductor names. And you do see in here very nice double-digit growth, kind of interesting. 47% growth year over year for 3 quarters in a row, a couple of 12% growth. I think those are just coincidences. But in any event, I'm liking the strong double-digit year-over-year earnings growth. You do see very strong revenue growth, particularly in recent quarters, 19%, 25%, 28%. So looking good over there. Here's something, and I pointed this out in yesterday's video as well, is the forward-looking estimates. So when this company reports 2021, which should be within the next few weeks, analysts expecting 48% year-over-year earnings growth to 102 per share. And this is what I find even more interesting, okay, is 2022, this year, 19%. So the reason I find that more interesting is because the comparisons for many, many companies over 2020 were pretty easy. So it was fairly easy for a lot of companies to come in with strong earnings growth over last year. Well, not last year, over 2020 now. And of course, that was because of some of the COVID shutdowns, particularly in the second quarter. We saw a lot of companies really get slammed in that second quarter of the year when the restrictions really kicked in. But of course, semiconductors, they were always in demand, so it wasn't really as bad in that industry as it was in many others. But nonetheless, you're seeing more difficult comparisons throughout a lot of industries for 22 over 21. So anytime I see something that has a double-digit estimate looking ahead for this full year, it catches my attention. I really have not seen many, if any, triple-digit earnings growth estimates industry-wide for any of the industries I cover. I'm sure they're out there, just nothing is coming to mind right now. Okay, let's take a look at the chart here. This stock is forming a nice consolidation right now. It's kind of, let's see, 20%, so that's pretty good. Really, the bottom's not falling out there. Now, one thing that I am a little hesitant about here is this one has formed several bases. You've got sort of a sloppy little base here, cup with handle, another little flat base in here, bounced off the 10-week line, found support. So this is kind of the fourth time that it's based here without rising 20% after the last base or undercutting its previous structure low. And I'll show you what I mean by that. If you go back here and you look at the cup that formed, this is back in the big 2020 COVID decline. You see that easily. You could see it undercut the prior structure low. So you haven't seen that as it's been rising. You've seen higher lows. The problem is it's just not rising enough between the different base phases, which shows you there's not enough new money coming in. Could mean that institutional investors may be getting a little exhausted of putting money in here, and you may see that this particular base may not lead to as strong a rally as you might see in the past. Nonetheless, this is one to watch. I like the prospects for this. At this juncture, let's just wait until we see the 2021 full year earnings come in. Anytime earnings are just a few weeks away, I just say, just wait it out, see what they say. Even if the stock bolts higher, you don't want to chase it indefinitely, but you can jump in maybe a day or two after that. And if there's something in the report that causes a decline, well, you don't want to be caught in a downdraft. All right, that's today's lesson. Hope you found that helpful. Thank you so much for watching.